These are the cash flows from the project. And we can, if all we want is NPV, we can directly calculate it here. Discount rate is 14. So let's calculate NPV here. You can calculate NPV as using the NPV function. The first argument is the discount rate. The second argument are future cash flows. Then you're going to deduct the period zero cost or add period zero cash flow, which is negative. Alternatively, we could go ahead and use our template. 14%, cost of project is 86. I'm gonna make money for 5 years. And these are the cash flows. Let's paste the values. Either way, we get our NPV, 3976 here. Whichever one is more convenient for you. If all you want is NPV, just go ahead and do it using this format. In fact, since this is conventional, we could also calculate IRR using all of these. If we haven't done anything wrong, that number should be the same as, yeah. Is everything clear on how I reached the answer here? Okay. I mean, the problems in the exam are not going to be very complicated. I mean, it is an 80-minute exam after all. It's not going to be anything like what you did for the homework assignment in terms of complexity. But let's do a few more problems. Okay, let's do this. There's a lot of stuff going on here. These are the financial projections. Tax rate is 22. Assume all sales revenue is received in cash. Everything is cash. All net working capital is recovered at the end of the project. All right. So in this case, let's go ahead and another sheet. Enter our data. I got sales. Depreciation. All right. It's 14.9, 16.3. 17.8. Okay. We're going to have a tax rate 22%. Now, first things first, let me move this here. Let's calculate net income each year. Okay. Sales minus operating costs minus depreciation times 1 minus tax rate. Oh, let's make all of these dollars. That's the first part. Compute incremental cash flows of the investment each year. Well, first of all, let's calculate OCF, which is net income plus depreciation. Now, in terms of net working capital, these are expenditures made in each of those years. At the end, we're going to pay them back. So it's negative of some of these. Okay. And we also have $32.4. There's no mention of any salvage. So the cash flow from assets is simple. Operating cash flow minus net working capital, net capital spending minus what you spend on net working capital that year. Them up. These are the so-called incremental cash flows. Cash flows of the firm that increases because of the project. Same idea, if the discount rate is 12%, what is the NPV? Just going to go ahead and calculate them here. Usually, I actually add more digits to these. You never hurt yourself by having more digits in the formatting. PV is simple. NPV, the first argument is discount rate. Then the future cash flows. Add back the period zero cash flow. Is it clear how I got these done? I mean, I'll also post later tonight. There are some individual problem videos I have done in the past. It does not, I mean, chapter names are different, but the material is the same. I'll post those as well. If you want to go over how more problems are worked out. Anything else you want me to go over in terms of cash flows? Anything else that you're unclear? Because if you don't ask me, I'm not gonna talk about anything. On my first session this morning, there was only one person, but I did talk about some of the chapter 3 stuff, so you can also look at it if you have issues there. And I'll also post some individual problem videos on financial ratios as well. If you don't have anything else, then I will see you guys either Monday or Tuesday, depending upon your section. And I'll be mostly available this weekend, especially Sunday, if you want to ask questions. Thank you. Have a nice weekend. I know you're going to study, but. And I'll post the videos of these after my third session is done. See you guys.